Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Emily Grafeo, and with us is Bloomberg Television markets correspondent Nora Melinda. All right, Nora, we're going to start with a consumer company on the move.
Yeah, let's look at shares of McDonald's. This is ticker MCD. We're seeing shares up about 2.6% right now. And this is after they actually saw some customers really feeling enticed by their discounts. I mean, the McDonald's has really been throwing a lot of discounts out there, trying to make it easier for a lot of these consumers to grapple with the higher tariff environment. And that seems to apparently be paying off here, as we really are seeing consumers doing, a lot of these fast food restaurants doing okay with consumers still willing to go there. But you are seeing fast casual restaurants like Cava, for instance, ticker Cava, and others like Chipotle, a lot of those fast casual restaurants, it seems as though consumers are not really willing to pay as much anymore.
Interesting. And in McDonald's here, though, this is a sign then that people are trading down. People who may have been going to a more expensive restaurant are now turning towards a cheaper option.
Right. And of course, we do know that when you think about the lower income consumer, of course, McDonald's tends to be in the rotation if you think about where you'd like to get food and places where you can kind of get it on a budget. But I mean, I do think that you are seeing even McDonald's, which has been known to be more affordable, actually having to scale back and can create prices that are lower, more reasonable for the consumer to essentially, to meet them where they are, if you will, and to continue to entice them here, because it's not really working out for the likes of Cava, for instance, where you are seeing consumers not wanting to pay as much for fast casual restaurants.
Yeah, a Cava bowl, a slot bowl, if we can call it that. It's expensive nowadays.
They're pricey.
$15, $16.
Especially here in New York City. Of course, ours are priced a bit higher, but you're starting to see people saying, hey, I'm not willing to spend this type of money on, of course, food and essential, but if you think about fast casual, a discretionary item here. So you are seeing a lot of people starting to trade down, and you're definitely seeing McDonald's benefiting from that.
Okay, and then Cava, ticker Cava, that stock was down as much as 4%, but it's about flat right now. What did we learn from that move today?
Hearing its decline, but still the stock has really had a rough year. Shares are down about 54% so far year to date. And this is, of course, the company slashing its full year sales growth target. They're saying that foot traffic has stalled in the third quarter, and they're really seeing consumers that are financially squeezed here, really foregoing a lot of the fast casual restaurants, as we've been discussing here. I mean, we heard from Shake Shack. I mean, we heard from Chipotle. We've been hearing from a lot of those in the fast casual space, and it seems to be the same read through here. Consumers are struggling right now.
What is the Nora Melinda, Bloomberg Television markets correspondent, lunch order?
I'm not at Cava, actually.
You're not a Cava
I might have to
girl.
run over to Chipotle, which I know is one of your favorites, Emily.
Yes, I do like Chipotle. I recently discovered the Chipotle hack. You can order from the kids menu.
Now
and you can
knows.
save money. I don't know if
there you go.
I don't know what the read into the consumer outlook there is, that people
love
are
a kids meal, right?
Ordering from the kids menu. But yeah, I mean, everything's getting more expensive. Speaking of expenses, tickets are expensive. Going to concerts are expensive. What's Live Nation doing?
Right? Are we still doing that, right? People still going to concerts? Well, we are seeing, we did see a sales miss for Live Nation here. That's ticker LYV. And analysts really saying this is a good but not great report. So they do see long-term prospects that still remain promising. But in terms of this current time period, you are seeing a lot of consumers not spending on concerts. Of course, another discretionary items. We're seeing shares of Live Nation down about 8.5% right now as we speak, but earlier plunging for their worst day since 2023, down as much as 10%. But the company did also talk about some income tax pressure, particularly from the Trump tax and spending bill. But really what's being underscored here is the consumer that we're still keeping a very close eye on.
Interesting, right. And so Live Nation missing on revenue and concerts revenue. So the revenue's $8.5 billion versus estimates of about $8.61. Nora Melinda, thank you for joining us. And that's Live Nation, LYV for the ticker.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.